Good afternoon. Since it's 12 o'clock plus, welcome to my unique webinar of the month, Kaizen for Legacy, a smarter way to transfer wealth to family. I think you'll find this interesting. We've been doing this for a while, but we keep perfecting how we do it. And I'll point out a few of those things in the process. But anyway, let's get started. Kaizen, the founders of Kaizen is a company out of Texas called NIW, and they gave this transfer idea the greatest wealth transfer. And so, what is Kaizen? GWT stands for the greatest wealth transfer. So, GWT is Kaizen. GWT is a legacy-focused strategy we use. We use in Kaizen institutional leverage to help parents create a tax-free generational wealth. I think this might be the best way to pass assets to any generation. But let me show you how it works. Well, let's talk about the issues of today. Congratulations on your bachelor's degree. You are 41% less wealthy than your parents were. Wow, is that what's happening? Our children are the first generation in history that are worse off than their parents. It's a tough world. A lot of people can't buy homes anymore because you can see the apartments probably everywhere in the country. There's an article about this issue. Nearly 50% of U.S. parents are financially supporting their adult children. Oh, when I saw that statistic, I felt sick. I'm lucky. I have good kids. I think we raised them well. They're independent. I have some that are wealthier than I at this point, which is cool. Anyway, wow. I saw this in the investment business. Adult parents helping their kids. 66% of millennials have no retirement savings. Oh, they've got a tough row to hoe. So how can you give money to your kids? I try to list everything here just so we can just put it on the table. First, give them cash. Not everyone will be aware, but you can give up to $18,000 per year without paying a gift tax. Now, I don't want to get into estate tax a lot, but you could give more than that. You're going to take it against your unified credit for estate taxes. But up to 18,000, you don't report it. You don't need to file a form. So you could give 18,000 to a son, and my wife could give 18,000 to the same son, and I could give 18,000 to his wife, and my wife Barbara could give 18,000 to his wife. So you can you can get around this and not have to file a gift tax for it. But you can give cash. You can give appreciated assets, stocks, real estate, but you need to be careful here. It may trigger a tax. In fact, in most cases, it will. You could pay for their medical. Just pay their medical bills or set up a 529 plan for funding and education, or you can buy life insurance on family members. And that's what we're going to show you how Kaizen can be a wonderful approach. Advanced strategies, there's irrevocable trusts, ILETs as we call them. If your estate is large enough, you need to do that. There's these GRATs, there's charitable trusts, there's business interests, family loans, UGBA accounts. There's other ways, but maybe the word advanced might be, they're not that advanced. But anyway, that's as many of the ways I could find to gift to families. And we're going to show you how Kaizen works well. So, do you want to give cash? Is that a good idea? Well, we think there's a better way. Provide a way for your family to control how they pass their wealth to avoid reckless spending. Combined with safety features and a trust, a lasting legacy. Giving a GWT Kaizen, you can add 3 times more money, 60 to 80, 100% more benefits because of the leverage. They'll have access to cash for life's biggest events, college education for their kids, weddings, first-time homes. They're going to have living benefits, disability benefits, long-term care benefits. GWT Kaizen offers tax-deferred growth. Eventually, you can take it out tax-free by loaning. The growing trends of parents is they're giving while their kids are alive, and that's what this is. And this is way, probably the best way I can find. So, if a young person wants to buy some large life insurance company, they're going to have to financially qualify for it. Insurance companies, yes, they like to make sales, but there's a lot of ill approaches that are happening. I did a little homework. Insurance companies require financials, and they're trying to avoid fraud. Stranger originated life insurance. We're trying to make sure there's a real financial need. They're confirming if the policy is affordable. They don't really want to sell policies someone they can't afford, and they want to manage the risk for themselves, and they're insurers. They're trying to look out for themselves too. Typically, a young person can't buy a whole lot of insurance, and they're going to have proof who's paying for it. Do they have the financial well-being to take care of it? But as I said here, this is a way you can give to your kids. They don't have to financially qualify for it. How are people using this? It's more a tax efficient way of passing on wealth. You're using annual gifts to purchase policies on adult children. You're not giving all of it all at once. You're giving a legacy with death benefits and the cash value for future generations. Lifetime exclusion gifts to trust, enhancing multiple generations. I did a case study. I added this just the other day. I did a young person, 24 years of age, excellent health, and the parents, the 18,000 is actually the minimum for a 24-year-old. And so we went with the minimum payment, so 18,000 for 5 years, giving it to this. Actually, I should have put this down. I did a female in this example. So the amount of giving is 90,000 over 5 years. We have bank leverage, that's Kaizen. So the bank's going to put in 13,417 for the first 5 years. And then 6 through 10, they're going to put in 30,067. So the bank is going to put in 217,000. You as the parent going to put in 90,000. So 307,000 is going to go in. Where the current illustration growth rate is 6.45 as required by NAIC. So what does it look like? Immediately, this person has the life insurance benefits, day one, $1,012,000. and you have access to chronic illness, long-term care. Oh, I didn't add the dollar amount, so I did that on another sheet. Darn. But you have all these benefits right now, long-term care, disabilities, all helpful. And using that growth rate, this person could start a tax-free income of $181,000 per year. And I did this through 95. So this person, this 24-year-old, waiting till 65, from 65 to 95, then pull out $5,611,000 tax-free. And there'll still be a death benefit of $1,384,000. Remember how much the investment was? $90,000. So you have the second generation, Gen 2 as we call them today, and you help the next generation, $1.3 million, for the third generation. Oh, here's a little summary. Gen 1 contributes $90,000, $5.6 million tax-free income, $1.6 remaining legacy, plus full protection throughout the policy's life, disability, long-term care. Wow. A lot of benefits. NIW and myself, we've set up a special site, especially for this gifting strategy. And that QR code there will give you to this site. Here, you've got a video that's on the front page you can watch. You've got chapters explaining Kaizen, exactly how it happens, how you pay it. This is kind of a total explanation site. And you don't have to give me your email or your phone number or your birthday to go to this site. Purely just use it. This site has, as I said, no form fill, no sign up. You have an instant estimator on benefits you can calculate, and is pretty in depth as you study it over and think it over. Now, before I go too far, I just want a quick review. I assume a lot of you have gone with me through Kaizen, but there's the 5 payments, your payments, the gold pigs, and then there's the bank contributions for 5 years and the bank for the next 10 years. That's kind of an illustration to give you a picture. Here's a different diagram with the death benefit and the living benefit, chronic illness, terminal illness, all the benefits that go along with it. And so you have the protection, and eventually it has your income and your benefits. I did another little study to try to give you a feel what this might be like. Let's say you have $250,000 that you want to give away. Well, okay. This first one is if you don't give it away, you just let it sit there, and if you let it sit there at 6.45, and after taxes you're making 4.34. At age 100, that's 250,000 will be $1,105,000. And if you live to 100 and pass it on, 35 years now, your kids will eventually get that. So don't give it to them now. Just let it happen as an inheritance when you pass on. Or another idea is you could buy a policy on yourself. Age 65, let's say you're 65, you have a death benefit of $691,000. And if you start taking income at 80, you need You've got you've got the living benefits, you've got the death benefits, you've got all these benefits, and then you could still start taking income at 80, and through 100 you pull out 819,000 and a death benefit of 226. That doesn't look greatly exciting because we're buying insurance on a 65-year-old, but you have the long-term care, you have the disability benefits, probably better than the first lot. But then if you start doing it on your kids, I didn't go with a 24-year-old in this graphic. I did a 40-year-old. Your kids, if you're giving money away, your kids are probably not 24. They're probably 40 in that area. So here we go. There's the death benefit of $1,887,000 on the child's life, and they can start taking income of $138,000 tax-free at their age 65. That they'd pull out $4,968,000 by the time they hit 100, and they'd still have death benefit of $1,442,000. So maybe it's the best way. If you have a daughter age 30, younger, you'd have more death benefit. You'd have more income for them at 65. They'd pull out more money through age 100. So that's kind of give you some visuals of what this is. The traditional Kaizen qualifications you need to be 18 to 65. You have to have earnings about 200,000 plus, but in good health or excellent health. Be able to make that 5 annual payments. In this approach, Gen 1, the parents must have life insurance of their own, must be able to financially qualify with their own financials. Gen 1 needs to have that 200,000 household income, plus 3 times a net worth, 3 million net worth in that area. And then Gen 2 doesn't have to have major net worth or income. It can be offered up to 2 million death benefit without financial qualifications. That's a major deal of how this kind of works. You can have yearly payments, or we have with Allianz, you can do monthly payments. You pay into a trust, and the trust does the borrowing. Generation can track generations to enrollment process, and generation 2 will be granted access to servicing. There's that QR code. This is where you start. If you're interested in this is the place to get started. So let me just make sure you have enough time to take a picture of that QR code. From a training class that NIW did, I pasted some other information. The starting, I like this explanation. The first thing, generation 1, they go onto this ILIA site, and that's what it's called. And they put in their information: driver's license, 2 years tax returns, cover letter, what you're doing this for, and you fill out the invitation to your next generation: name, date of birth, contribution, gift amount, and you can do as many as you want. But then generation 1 finishes all their paperwork and signs it and does all these things online. And then it goes to generation 2. And generation 2 clicks, do you want to accept this gift? Well, who's not going to accept it? Then they go through the usual Kaizen carrier application, They're just not going to have all these net worth and income requirements. And then this completed application goes to NIW to help with the carrier underwriting. And then once that's all done, Generation 1 will pay directly from the portal for the recipient. In the past, we had a Generation 1 had to give money to the child and then they wrote the check. We've improved the system, made it more of a feel like a real gift where they're not really touching it. Quite a few did logistic improvements. So our gifts should last a long time. Our gifts should be meaningful. And that's what this really helps people have, something meaningful. Again, there's the QR code. And that's it for today. I hope it's been helpful. And if you have any questions, just type them out in and I'll look them over and get back with you. Have a great day. Jim Barlow, OakTree Premium Finance. Bye.